Good morning everyone and welcome to another RF Crypto video. Today's market has seen another decline of 5.26%. The global crypto market cap now stands at a little bit less than $1.5 trillion. And if we can remember, it used to be over 2.1 trillion a couple of weeks ago. So this decrease has been massive. We are technically in a bear market and the markets have bled in the last week or two. Bitcoin has gone down by almost 5%. At least it has made some recovery. Yesterday it fell below the $30,000 level, but now we have seen it go above that level. I think that with time, when it reached a $30,000 psychological level, we saw the bulls getting into the market and buying up Bitcoin so that it maintains above that psychological level. Ethereum is almost at $2,400. BNB is down by almost 5%. Something that is quite surprising, but I mean, it's not really surprising if you think about it, is Luna. It's down by almost 50% in the last 24 hours. And this isn't very surprising because if you look at UST, it's down by 8%. 8% doesn't seem like much, but if you consider that UST is a stablecoin and it's no longer pegged to the dollar, it's now standing at $0.91, then it is bad news. And because Luna and UST are interconnected through Terra, if there is a depegging of UST, Luna will suffer greatly. So looking at the rest of the market, it's all down. There are some coins that have done green. However, these are due to token specific factors and not really due to market movement. The general market is down and it has been down for the last week. Looking at the Bitcoin chart, we have seen Bitcoin going down with so many red candles. However, once it reached the $30,000, which is a psychological level and a support level, the bulls got in the market and started buying up again. And now it is a little bit above the $31,500 resistance level, which is the new support level. So at the moment, it's trading between 31,500 and 35,000. However, any sort of small bad news, because the markets are so volatile and in such a negative territory, it might head back down. Also looking at leverage has gone down significantly. And this makes sense because once the price of Bitcoin started going down, a lot of positions got closed. Liquidations are over $1 billion for one day in the last 24 hours. And this has caused leverage to collapse from 0.27 to 0.25. This might not seem like a lot, but we have seen leverage always reaching all-time highs, and this drop is pretty significant. And if this keeps on going, and if the prices keep on going down, we will see a lot more long positions being liquidated and this leverage position going down even further. So it's something important to keep an eye on, not the most vital thing at the moment, but it is a fundamental market indicator that will give us an idea of how leveraged the market is and how people who are in these leverage positions are suffering as a result of this market volatility. So the UST stablecoin veers wildly from dollar peg. So the algorithmic stablecoin, which is UST, lost its $1 peg again. So it's second time in 3 days, falling to as low as 0.65. In the beginning, we saw that it's 0.91 at the moment. However, a few hours ago, it went as low as 0.65 before there was an injection of capital or liquidity in order to pump its price back up to closer to $1. And because the UST depegged, the price of Luna, which is its sister token, dropped 45% to $33 in just 24 hours. And the price action prompted the custodian of Terra's Bitcoin reserves, the Luna Foundation Guard, to snap up and quickly deploy over 28,000 Bitcoin in a bid to defend the peg by buying up UST and providing liquidity on exchanges. So because they had these reserves, they can use these reserves in order to purchase existing UST in exchanges to pump up its demand and keep its price within the $1 level. So just because it's at $0.65 doesn't mean that it will stay there. The Luna Foundation Guard took that Bitcoin and bought UST at the $1 level in order to bring prices back up to that level. So UST is an algorithmic stablecoin and works with the Luna coin in order to maintain a peg of $1. And this is using game theory and a set of blockchain-based mint and burn mechanics. In an ideal world, the mechanics are supposed to ensure that the traders can always swap $1 worth of UST for $1 worth of Luna, which has a floating price and is meant to serve sort of like a shock absorber for UST price volatility. And because there is this sort of volatility in the price of Luna, you can always ensure that there will be enough Luna available in the market to maintain the UST price peg of $1. However, now Luna is worth less in terms of market cap than UST, which brings a big problem. And I mean, as it says here, the most consequential outcome of Monday's price action is that Luna's market cap has fallen below that of UST's. This potentially jeopardizes UST's entire stabilizing mechanism, which is built upon the idea that one UST can always be swapped for $1 worth of Luna. And if UST is more valuable than Luna, Terra risks becoming insolvent if there's a bank run, because if that's the case, there won't be enough Luna in the market to back UST in the sense of maintaining its peg, and the price will just keep going down and down and down. So in essence, if the market cap of Luna is below that of UST, we see that there is not enough liquidity in the market to maintain that peg in case there is a massive sell-off. And also remember, yesterday LFG announced that it would for the first time loan out the reserves to professional market makers in an attempt to defend UST's peg. These reserve funds, topped by an additional $850 million on Monday, have been used to defend UST's peg on exchanges like Binance and Curve. And because there was this massive injection of capital into the market and for market makers, we haven't seen the price of UST go down even more. It kind of stabilized, and despite this injection of capital and injection of reserves, it caused a second depegging in just 3 days. So on other news, Bitcoin's network transactions and fees surge amid investor de-risking. The number of transactions on the Bitcoin network spiked over the past week, and obviously this is due to the fact that we're now in a bear market. People are becoming more risk averse. People are trying to sell off their crypto assets in order to recover any capital that they can get, and this is basically called de-risking. They want to get out of a very risky market, which is crypto, at a time when the markets are falling violently. And the average fee rose to $2.72 last week per Bitcoin transaction, and this is about 15% higher than the typical average. And this is just because there's an influx of transactions going into the network. Obviously, there is a lot of selling pressure, and it doesn't matter if you buy or if you sell. If there's a lot of transactions in the network, then it will pump up the average transaction fee. And not only are there a lot of transactions in the network, but people are paying higher fees just to prioritize their bids to de-risk their portfolio. So they want their transactions to go through first in order to get a higher price, because if the markets keep on falling, the more minutes that go by, the more time there is for the price to go down, and the less money you'll get for your Bitcoin. They're trying to basically get the highest price they can before it falls even further. And for the first time in a long time, Bitcoin's inflows to exchange outpaced outflows, and last week there was more than $50 million more worth of inflows than outflows. And this is sort of like a bearish signal, because if there's a lot of inflows into exchanges, it means that people are less willing to hodl Bitcoin. They want to put their money back into the exchanges in order to sell it for fiat or for stablecoins. That means that people are tired of hodling, they're getting scared. It doesn't make sense for them to hold so much Bitcoin, and they say, okay, right, this is it. I'm not going to hold any more Bitcoin because the markets are tanking. Let me take this money and invest in something else like stocks. And they take their Bitcoin from their hot or cold wallets back into the exchanges, and they sell that Bitcoin, creating even more downwards pressure. So it just rests to see how Bitcoin moves. This is a massive correction. There is a rocky road to capitulation. And because now there is no more free money in the market, the interest rates have risen, there is no more cheap credit, it means that the recovery path for Bitcoin and for cryptocurrency in general will be a lot more difficult than it was during COVID. Prices have gone down, people can just put money in the market in order to pump up back the prices. It will take a lot more than just normal investments for them to pump the prices back up. But we'll have to see. With crypto, this is how it goes in cycles. Obviously, this was very unexpected, and it's just a matter of managing the risk and waiting the pain out. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.